Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everyone, I'm Jeremy Mullen here today for our top stock pick segment. I will be joined in a few minutes by Shiraz Mian with his pick, but first let's get into mine, which is Crocs, ticker symbol CROX. Now Crocs is a Zacks #1 strong buy that is a leader in casual footwear. The Colorado-based company was founded in 1999 and employs just under 4,000 people. Crocs offers various footwear products, including clogs, sandals, flips and slides, shoes, and boots. The company's focus is on soft, comfortable, lightweight, and odor-resistant shoes that can sometimes have a unique look to them. Fans of Crocs stick with the brand, which has helped the company excel in the pandemic through online sales. So let's get to those earnings, which were last week. The company reported a strong quarter, seeing an EPS beat of 740%. They reported $1 versus the expected 12 cents, so a monster beat. Revenue also beat substantially, with the company reporting $331 million on the quarter versus the expected $241 million. Their margins ticked higher, which is a positive, but the big beat is attributed to the 67% year-over-year growth in e-commerce. These digital sales helped the company excel during the pandemic. Clog sales grew 10%, but the company is seeing some more inventory issues as demand outpaces supply. So there's a minor risk there, and this might be a good problem to have as they scale up, but this could hamper sales growth in the coming quarter. So it's something to watch out for. Piper had a note out that saying that they're gaining market share due to their healthcare donation program. Now, if you know any nurses like I do, they love Crocs, and they've worn them for years. And what Crocs did is set up a healthcare donation program where $40 million of retail value gave 860,000 pairs of shoes to healthcare professionals since March 25th. This is a great program, and a lot of people took part in it. Moving on to the fundamentals, the company has a market cap of $2.5 billion with a forward PE of over 42. Valuation comes into a question with a Zacks style score of C in value. However, the style score of A in growth and B in momentum, with those style scores, there is hope that the company can grow into this valuation. So that's something to watch going forward. At the beginning of the quarter, only 30% of the stores were open, mostly in Asia. And of course, this is due to the lockdowns. As of today, 96% of the stores are open. So while the company is excelling in digital sales, they also will be getting their stores back as we head into the next quarter. As long as the economies can stay open, this will be obviously a headwind for them. Recent quarter and prospects are helping estimates go higher over the last 7 days. We have the next quarter estimates ticking up 7%. Now let's look at the technicals. Okay, here's the chart from the last few months, and you can see kind of the pandemic lows. It's had a steady increase, and it's followed this green line, which is the 21-day moving average. Never really tested the 50-day after May. And the red line here is a steadily increasing 200-day moving average. So we had this earnings pop, and they sold into it. And this looks like a perfect opportunity to buy as this 21-day is held again. Now, we're looking at upside targets. If we can get over this 38, 39 area, the drawing from these previous highs to lows, we get upside targets around 42.60 and 47. Now, these are Fibonacci targets that I use all the time for finding kind of targets where we can sell into a move. So if you're to buy here, you can look short term at these two levels. The stock, as long as they were stay up above these 50 and 200-day, I still like it. Below the 200-day, a break would tell me something's wrong. So looking at a longer term chart, you have this steady incline over that 21-day moving average. Now, going all the way back to earlier in the year, if we draw this retracement from the highs to lows, it gave us a 61.8% retracement with broke. This gives me 161.8 targets to 66. Now, this is a big macro move, so this is a longer term move. I'm not saying it's going to happen next month, not even this year, but longer term goals, technically, we could see this $66 mark hitting, which is obviously a rather big move of almost 100%. And if the company can keep on growing into its valuation, we can definitely see the stock price accelerate higher for this. Okay, that's it for me and my top stock pick, which is Crocs, Crox. And here is Shiraz with his.
Thanks, Jeremy. I'm spotlighting Nvidia, and even though I'll be talking mostly about this chip stock, I am very bullish on the semiconductor space as a whole as well. Most of these guys had pretty strong June quarter numbers in recent days. Intel, obviously, notwithstanding. And I feel strongly that NVIDIA, when it reports Q2 results on August 20th, will give this stock further boost, even though, as most of you know, it has had a phenomenal run already. With respect to on the run the stock has had, which probably is making some of you a bit queasy. If you are a value-oriented person, then NVIDIA at current levels is definitely not for you. The stock has practically doubled since its March lows. It's currently at or close to its 52-week high. But for all of the others who have the capacity, I should say, the stomach, in fact, to hold on to a hot stock like this, I think getting on board this super fast charging name ahead of the earnings release may not be a bad idea. I personally have long been an NVIDIA fan. I've held it in the focus list portfolio since May last year, and we are sitting on huge gains. I've been a fan of the chip space as a whole for a long time, and in that focus list portfolio, which is a key part of our Zacks premium subscription offering. We have Lamb Research. We have held it for the last couple of years, Micron, even Intel. So I own a number of the different major players in the space. Just briefly on the stock itself, it's phenomenal operating and performance momentum. The stock earned close to 11 billion in revenues last fiscal year. Their fiscal year ends in January. For this fiscal year, they are on track to earn close to 14 trillion. The following year, 17, and in the year after, 24. I strongly feel that those numbers will get upgraded as these June quarter results come out. But if you just looked at NVIDIA's results and estimates, you will be at a loss to find all the other macro headwinds that the rest of the world and every other company is facing. So very strong secular momentum in its business, and you see that in its results too. The company has historically been seen more as a GPU leader on the gaming side. But I have long been of the view that NVIDIA gives you exposure, a leading exposure to all the major themes, secular themes that are driving the tech space as a whole. Those themes are from artificial intelligence and cloud to Internet of Things, and obviously gaming. The stock has benefited from this work from home trend that still remains in place. But as those of you who follow the stock know, it is well positioned for the other side of the pandemic as well, as the U.S. and the global economy comes out and reopens in a major way. All in all, I would say Nvidia represents everything that is good and that is driving the tech space as a whole, and the chip space in particular. The valuation point that I briefly touched on earlier, if that is a worry for you, you may want to take a look at Intel, even though the company has some issues currently and will likely not do much over the next couple of quarters. If you have a longer time horizon, it is nevertheless a quality franchise currently trading at a fairly reasonable price. So Nvidia, my top choice. If you're value oriented, then look at Intel.